Well, I mean,
when you saw this number,
yeah, I mean, obviously growing at 1.8 year over year is better than growing at 1 year over year, but we continue to get poor, and I think at a very basic level, it's not a big surprise. I mean, our economy is about 130 trillion naira. We need investment of about 35 trillion naira a year if we're going to grow 6 to 8%, and we're only getting half of that. So as long as we only get half the investment we need, we're going to grow 2% and we're going to get poor. So I think the fundamental question people need to ask is why are we not getting more investment? And then that will lead to the structural reforms we need, we hope, to get out of this.
Bismarck, your thoughts?
Well, first and foremost, annualized, this comes to about 1.75% growth for 2018 so far. So to achieve the 2% growth projected by the World Bank for 2018, the fourth quarter, you've got to do something like 2.25. Is that going to happen? I don't think so. So we've got to adjust our expectations to the fact that this year we are going to probably achieve 1.8, maybe 1.85 at the end of the year. Just like Andrew said, 1.8% population growth rate of something close to 3%, so we're getting poorer. But more important is productivity. Labor productivity is negative 0.4%, which means that this growth is coming as a result of natural wealth rather than produced wealth. So we've got to deal with that. We also have to look at the sectors that employ people. So the employment elastic sectors, transport, construction, real estate, those are all laggards. So then we look at interest rate sensitive sectors and credit sensitive sectors. So you find that things that are interest rate sensitive actually suffered, right? Agriculture is growing, it's expanding a little bit, but it's far below what its 5-year trend is, in spite of the fact that yields are improving and things are happening. So there are constraints that have to be removed. There's a need for investment. I gave you an example that cement manufacturing went up by 8.4%. No surprise. Dangote is committing significant amount of resources. Lafarge is committed. And therefore, where there's investment, there's the invested dollars. There's also the multiplier effect. And there's also employment impact. So I think those are things that we need to bear in mind.
Andrew, let me take you back to that, that point you made about investment. Why aren't we seeing these investments?
Well, I think there's been a lot of work on the ease of doing business in PEBEC and Dr. Jamoke, and they've made great progress, but that progress has not counteracted some structural issues that we have. So from an outside viewpoint, it's still very confusing with the exchange rate. So out of the 35 trillion investment we need, we probably need about half from outside, and every time they see multiple exchange rates, they're confused, and they pull in their investment. I think a second big sector...
But do you think they understand why we have those different exchange rates and how
they're nervous about coming to Nigeria. They're nervous about coming to Nigeria already, so they're not... Any reason that confuses them is going to make the investment go down. Just that's the bottom line with our reputation. I think another sector that's really hampering us, of course, is power. Why would someone invest in the power sector? Very confusing. And of course, in a way, power, I think, highlights some of the problems with our centralization. I mean, I grew up in an era where big grids were the way to go. So power had to be produced in large amounts. I grew up near Niagara Falls. But technology has changed. Power can be provided in situ. The cost difference between a large gas turbine and a small gas turbine per unit of power is actually pretty small these days. And yet we continue to have a centralized power regulatory regime which doesn't have a market tariff. So we don't get investment in power, and we don't get power in manufacturing. Real estate, I mean, I think Bismarck is exactly right. In terms of driving employment and reducing poverty, we have said for 2 years the #1 industry is real estate. Why? Because you have to source all of the raw materials, most of which is local. You then have masons, carpenters, electricians, caterers to feed them. And then when someone buys a house, they buy furniture and other things for their house. So we need more housing. We're short 17 million units. Why is real estate lagging behind everything else? We have problems with the land registry. So if you don't know you own the land, no one is, you're not going to invest in it.
These are problems, challenges we've had with us for a very long time. Bismarck, let's move on to other highlights of this, the latest GDP report. Oil production. We saw that increasing marginally compared to what we saw in the previous quarter of 2017. But interestingly, we did see a drop also in oil GDP. That also dropped. But my concern is the latest OPEC meeting where Nigeria was asked to take a haircut. But you said that it's marginal, it's not something that's going to...
No, it's not significant.
Yeah. But think about that on the back of the fact that we had relative peace in the Niger Delta this year, and we had, at least in the first half of the year, high oil prices as high as $80 per barrel. Yes. I'm just wondering, how did we...
No, there are two components. There's investment dollars, because the majors are investing, and then there's production dollars. What you are left with now is production dollars. No big majors invested. So you got to change. There's no PIB. The fiscal terms are not that friendly. So we got to do something in an environment where oil prices are that unstable and actually trending downwards. You got to do something to incentivize people to come and invest. And coming back to the other point about investment, there are 4 components of investment. There's foreign direct investment, there's foreign portfolio investment, there's diaspora investment, and then there's domestic investment. All of these investment buckets are sensitive to confidence. Confidence is a result of not what you say, but what you do, right? And so those are things that we are beginning to see. I think the government is now, elections are coming, saying the right things, doing more of the right things. So, but people want to see how consistent is this. I think that's important. So if we roll back to what you talk about, oil production, there's oil, there's gas, right? And the oil production from the marginal fields and the other players is coming on. But now that we're going to Q4 or we're going to Q1, we are now compelled by OPEC to actually be part of the quota. We're exempted from the quota in the first place. They gave us 1.8 million barrels, and ourselves and Libya, on the strength that we had a recession. Now you cannot talk about a recession. So if the oil markets go into further turmoil and we have to cut back some more, so we shouldn't accept the fact that our oil production is guaranteed, 1. 2, the prices are guaranteed. And with those revenues that are unstable, as you go into an election year in 2019, we have to get ready for an adjustment mechanism.
I think we're already saying that because, Andrew, as you probably also know, the president has said that he's going to take a second look at the 2019 budget, and it's going to be leaner this time. Obviously, they have to perhaps adjust some earlier projections, perhaps around the oil production, definitely.
The benchmark
oil prices, definitely. So I'm just wondering, what does that mean for us? For
I think one thing we would like to start to put out is actually Nigeria's biggest export is not oil, it's people. The actual largest amount of dollars that flows into this country is from diaspora remittances. So we've got visible flows of 22 billion. We've got invisible flows we would like to estimate. So let's call ourselves not an oil economy, a people economy. So maybe one thing the government could think about is let's have a strategy for that diaspora. I mean, as Bismarck says, they have massive spending power. I mean, they're sending a lot of remittances. A lot of them, I know, want to invest.
we have a diaspora bond at that.
We have a bond, but we don't have
$500 million. We are doing $22 billion.
We don't have a strategy. I mean, this is our most critical resource. If we mobilize the diaspora in a proper way, gave them confidence.
You said we don't have a strategy. We're working with a document, the Economic Recovery and Growth Plan. That is
there's
something wrong with that plan.
We don't have a diaspora strategy. We've got 15 million people in diaspora. My understanding is the U.S., a Nigerian American, earns more than the average American. So we have a lot of human capital making a lot of money. They want to invest in help Nigeria. Are we strategically taking advantage of that resource? And that resource is growing, and oil is dying.
So that is one. Bismarck, we're going into 2019. I mean, what do you see for the economy?
The economy?
Yes. In terms of growth, you've talked about investments. We don't know. I mean, we're going to be in first half elections.
2019, first quarter is all elections and disputes. Second quarter is about going to the tribunals and all of that. Third quarter is about appointments and congratulations, right?
And then current or
whatever it is. Fourth quarter is about the real work starts. So we're going to pay the price of all the political expediency, right? In end of 2019, but by 2020...
So you combine that with a low growth environment.
Absolutely.
What
2019 is going to be a tough year, very tough year. So, but I'm saying that 2019, by the end of 2019, we should be gasping, but at the end of 2020, we should be laughing.
Laughing with the GDP group. Andrew,
no, 2020.
Andrew, what do you foresee? Because obviously we need to get those investments in, and I'm wondering, what is a good strategy?
I mean, if the administration, whether it's the same administration or new administration, does the things that encourage investment. I mean, we are the biggest open market in the world, so we are so close to liftoff. There's just a few things that need to be done. If we turn the confidence needle a little bit, we'll get that investment, and we get that investment, we'll get that GDP growth. That's the simple mathematics.
No, you will go from 2 to 8% in a matter of 2 to 3 years.
Yeah.
But in the meantime, obviously, do you see us still working with that document? Do you see a major...
It's not the ERGP. You see, we've had documents. Before the ERGP, there were documents. After the ERGP, there will be documents. Okay. It's the capacity to execute and believe in it, and that you have to make that quantum leap from a mixed economic model to a free market economic model. Once you can have that confidence and audacity to do that, all other things will follow.
I mean, I think we're so close. You know, I've been at events about housing. A lot of smart people know what to do. Events about agricultural, events about ICT.
Railway.
Every sector is ready to go if we get organized.
Just to get those investments in. Thank you so much, gentlemen. It's been an absolute pleasure having you on.